Welcome to another amazing episode of Raising Private Money. I'm Jay Connor, your host, also known as the Private Money Authority, and this is the podcast where we talk about how to get all the private money you would ever want for your real estate deals without ever having to ask anybody for money. Well, I don't know anybody better to give you a great example of how they have gone about raising private money in this exact way. And so, my special guest today is actually he and his wife are in my top elite group, my Mastermind family, and they're real estate investors. They hail from Lexington, Kentucky, and they've been investing in real estate actually since 2022. Now, their journey actually began when they attended my live private money conference event all the way back in June of 2021. And that's where they discovered the power of private lending and what that can do to your real estate investing business. Private lending being where you don't rely on banks or any kind of institutional lenders. You don't have to rely on hard money lenders. It's private lending. We're going to talk about exactly what that is. Well, since then, in June of 2021, they've specialized, like myself, in teaching people how to earn high returns safely and securely through this strategy. Well, they've raised nearly $2 million from private lenders to invest in their deals, 1.9 million to be exact as of today. And their 17th deal is just about to close. They are so passionate about helping others build wealth through smart, strategic investing. In just a moment, you're going to meet my friend, mastermind member, and fellow Christian, Jonathan Broyles, right after this.
If you're a real estate investor and are wondering how to raise and leverage private money to make more profit on every deal, then you're in the right place. On Raising Private Money, we'll speak with new and seasoned investors to dissect their deals and extract the best tips and strategies to help you get the money, because the money comes first. Now here's your host, Jay Connor.
Well, hey there, Jonathan. Welcome to the show.
Hey, Jay. Thanks for having me.
Absolutely. Good to see you after seeing you and your wife, Kara, in person last week at our most recent mastermind get together. And so I can see now you made it safely back home to Kentucky.
I did.
Well, Jonathan, I wanted to invite you on Raising Private Money today to talk about a number of things, a case study specifically, this deal that you and your wife, Kara, are working on. That's got an after repaired value on it of over $1 million. And we want to slice and dice that deal, how you found the deal and the numbers and what they look like. But before we get into analyzing this over $1 million deal, share with the audience yours and Kara's background. In other words, a mini short autobiographical story. And then what led you to get into real estate investing?
Yeah, so my wife and I have been married for 20 years now, and really ever since the beginning of our marriage, we both had a very high interest in real estate and just never really knew where to get started with it until we met Jay back in June of 2021, as he already said. And so after meeting Jay, we learned all about the awesome world of private lending and how easy it is to purchase houses in that way. And not only how easy it is to purchase houses, but how much of a blessing that we can truly be to really everyone that we encounter through the process, whether it be our private lenders or our realtor or our contractors or the homeowners, the sellers who are trying to get out of a situation and needing support. We've realized in working with Jay just how much of a blessing that we can be. And so it's really been an incredible journey for us. And we are just thrilled for what the next few years are going to bring for us.
Yeah, I didn't realize until the introduction that you all were already around 17 deals. And so that's just phenomenal. So let's make sure that our audience is understanding what we mean about private money in case we've got any new listeners, and we always do. But when we talk about private money, really unpack that. What are we talking about as far as how are you getting funding for your deals, and what is a private lender?
Yeah. So a private lender is, I mean, very simply put, it's an individual who does really what the banks do to earn a high rate of return on their investment capital or their retirement accounts. So we go out and present opportunities to everyday folks and just give them an opportunity to earn a high rate of return on the money that they may have, money that may be in a traditional investment like a CD or a money market, or even a retirement account that's not earning a high rate of return, or maybe it is earning a higher rate of return, but it's not as consistent. There's a lot of volatility in where they've got it. And so we present an opportunity for folks to invest their funds into real estate and earn a high rate that is very consistent, that is backed up by the real estate itself.
So what do these private lenders look like in your and Kara's world? Are these like sophisticated, ultra wealthy people? Are these people, how would you describe them?
Yeah. So I would say in my world, no, they are not the sophisticated and ultra wealthy, because those are not the people that are in my sphere in my life. They are truly, as I said, they're everyday people. I mean, they're just like me. They're like my in-laws. They're like families from church who just are not satisfied with the return that they're currently getting.
Are they using, where are they getting their money? Where are they getting money or funds to invest in your deals?
Yeah, so we're seeing really a wide range of where people are getting their funds from. One of our largest lenders really just has it sitting in a savings account, earning extremely low interest. So they're thrilled to be earning a high rate now. We've got lenders who have pulled it out of a money market, again, earning very low interest in a money market, to now earning a high consistent rate. We've got retirement funds, folks who have brought their money over from an actual retirement account to earn a higher consistent rate of return. So really a broad range of where they can pull their funds from and what we're experiencing in our own lenders.
So what do you think your private lenders really enjoy the most about investing with you? In other words, what's the benefit to them? Why are they interested in investing with you and Kara instead of, putting their money in the local bank in a certificate of deposit for 12 months or whatever? Um, and what kind of protections do you have in place for them to mitigate any risk?
Yeah, I mean, I would say the most obvious reason of why our lenders enjoy doing business with us is because they know exactly what they're going to get and when they're going to get it. And so there is no volatility with how they are receiving their return from the very beginning. They have high expectations and know exactly what that's going to look like through the entire course of their investment. In terms of, I'm sorry, Jay, were you going to say something else?
No, I'm fine.
Okay. So in terms of just the protections that they have, there's a couple of protections. We always talk about with our lenders that their investment is safe and it's secure. And those are the two terms that we like to use. And we say that it's safe because we make sure that we're never over leveraged with their funds in any given property. A 75% loan to value ratio is really the most that we go on the majority of our properties, to make sure that we've got a large equity cushion, a 20 to 25% equity cushion at a minimum in each property. So they're protected in that way, as well as they receive a mortgage just like a bank does when you're getting a mortgage from a bank. So each loan is backed up specifically and secured by a specific piece of real estate, as well as some of the other protections that they get. Title insurance, we get property insurance on every single property as well. We're using really the market experts. We really rely on our realtor to provide us our values, as opposed to us going out and trying to read the market and understand what a house is going to be worth. We rely on the expertise in all of the various fields to make sure that all of our numbers, especially on the front end, as we're entering into a deal, we want to make sure that all of our numbers are very accurate.
So to repack or to summarize what you were just saying there, you look after your private lenders. They get a high rate of return, much higher than they're going to get at the local bank. They know exactly what their rate of return is going to be. You mentioned it's not volatile, so in that sentence, you're contrasting what you offer your private lenders to the stock market versus investing in the stock market. Because when they invest in the stock market, they already lost money with fees and commissions. And the value of what they invest with you could be worth less. I mean, the value they invest in the stock market could be worth less tomorrow than it is today. It could be worth more tomorrow than it is today. So it's just up and down and all over the place. And you summed it up perfectly when you said the private lender is in the same capacity as the bank. So they're not joint venturing with you on the opportunity. They're acting in the capacity of the bank, and then you're doing all the work. So really, another great benefit for these private lenders is they get to enjoy the wonderful returns that real estate offers in a very passive way. I mean, what do your private lenders have to do in order to be involved in a transaction?
They have to do almost nothing at all. They wire their funds. We go out and we find the deal. We make sure all of the numbers are the way that we need them. And then we schedule a closing with our real estate attorney, and the real estate attorney draws up the paperwork, and our private lender will wire in per the instructions of the attorney. And that's really all they have to do.
Except sit back and open their mailbox for mailbox money.
Exactly right. And Jay, I would add, in terms of the benefit for our private lenders, what we've come to realize in doing this is that we really, truly can impact lives in a positive way, even with our private lenders. One of our private lenders is a widow whose husband died about 6 or 7 years ago. And she had her money in a money market account, and she was earning $750 a year on that investment. And her financial advisor advised her to keep her funds in that money market because it was a safe return, but she was earning such a low return on it. And now in working with us, she's earning over $12,000 a year on that exact same investment. And it has significantly impacted her life and the level of income that she's receiving on a monthly and on a yearly basis, just by moving her funds from a traditional investment into working with us as a private lender. So we've come to realize that we really are providing a blessing to a lot of people in their lives.
Well, $12,000 a year is a whole lot more than $750 a year on the same investment. So we've talked a little bit about why your private lenders really, really enjoy doing business with you and some of the benefits that they receive. So on the other side of the coin, why have you and Kara chosen to do business with private lenders instead of going to the local bank and just doing business with the local bank, or say doing business with hard money lenders?
Yeah, so a couple of the reasons, the two primary reasons for us why we enjoy working with private lenders, really three reasons, I guess. The first one I've already stated, that we are very happy to know that we are a blessing to these people in providing a return that they're extremely satisfied with. But then from our perspective as well, using private money as opposed to hard money or even traditional financing through a bank, we can operate at a speed that is not even close to using traditional financing. A lot of times the homes that we're purchasing, sellers are needing quick solutions. And so using private money can be a very fast transaction because you're not going through all of the hoops, cutting through all of the red tape of all the requirements that the banks have. So we can move a whole lot faster. And then also in line with that, banks there's a certain number of deals that you can have going at any one time with a bank. They're only going to allow a certain number of loans. But that's not the case with using private money. We can have as many properties in our portfolio, as many deals in the works as we've got private money for. So there is absolutely no limit in that regard. So just simply put, the ease of the process is extremely easy using private money, while at the same time, it's still an extremely safe and secure investment for our lenders.
Yeah. Well, Jonathan, just in case, we're getting ready to slice and dice and unpack this $1.25 million deal that you and Kara have gotten in the works. So, but in case somebody's got to jump off early and doesn't hear the details of this deal, I want all of the audience to know how to get in contact with you, because I'm telling you, I've known you and Kara for quite a while. And to all of our audience, I want you all to know there's nobody that I have worked with that's got any higher integrity than Jonathan and Kara Broyles do out there in Kentucky. Are all your private lenders right there in Kentucky, or are they all over the nation?
Yeah, we've got them. We've got some in Texas, some in North Carolina, several here in Kentucky. So just kind of scattered throughout.
Yeah. So you're not limiting new private lenders to live in Kentucky, right?
No, absolutely not.
You are not being you're not offering any kind of favoritism. So that's wonderful. So I want you to give out your contact information. And if you're watching or listening this show and you've got investment capital that's laying around that you're not happy with the kind of returns on it, or you've got retirement funds and you're not happy with those, then I highly endorse Jonathan and Kara for you to have a conversation with them about how they can put your money to work very, very safely and securely with no volatility, and make some really, really high returns. So Jonathan, go ahead and give out your contact information, and then we'll slice and dice this $1.25 million deal.
Sure. So I would start with my website. It is goldenrodinvestments.info. And there's a contact field in there. So if you're interested in checking out the website, filling out that form, that is one way that we can get in contact with each other.
Let me spell that out to everybody, Jonathan. That's www.goldenrod, golden, Golden, rod, investments.info. And of course, that'll be in the show notes. Go ahead, Jonathan.
Yep. And then very similar to that, my email address is going to be jonathan@goldenrodinvestments.info.
And of course, that's Jonathan spelled Jonathan, Jonathan at goldenrodinvestments.info. Okay.
And then you can have my direct cell number as well, which is 859-388-4660.
All right. Jonathan just gave out his personal cell to call or text 859-388-4660. And of course, you can be living anywhere to have the opportunity to work with Jonathan and Kara. So let's slice and dice this $1,250,000 after repaired value deal. I know you and Kara have got it under contract to purchase, and it's moving forward. So let's analyze the deal. First of all, how did you find the deal? And of course, you and Kara, like myself and Carol Joy, my wife, I haven't bought anything out of the multiple listing service in a very, very long time. All the properties we're buying are what we call off-market properties that are being sold to us directly from owners or sellers of those properties, not through the multiple listing service. I assume this is the same way, right?
Correct. Yep.
Yeah. And what was your source? How did you find it?
So we've got here in Lexington, we've got a reputable wholesaler. And so we actually located this particular property through a wholesaler that we've purchased multiple other properties through as well.
Okay. Well, there's a big takeaway for everybody that's watching and listening, and that is to find these off-market properties. One way to do it, and the way I look at it, Jonathan, is there's really no marketing expense at all until you buy a property. So you're not spending any marketing on getting a buyer's list or having a relationship with wholesalers that can bring deals to you. So the wholesaler brings the deal to you, and then what happens next? Let's go over it step by step.
Yeah, so we saw this particular property on the wholesaler website. I reached out to my contact there to see if it was still available. And so we arranged a time for us to go take a look at the property. And we went and looked at the property. It really is it's a very, very desirable area of our community. And so we knew from the very beginning at looking at the property that we had very good potential here if we could get the numbers to work. So our first step obviously was to go take a look at the property and look at it in detail. And so I went and looked at it myself to begin with, walked through the property, and it needs significant repairs. So the level of repairs greater than I have the ability to really estimate an accurate rehab for. And so I went ahead and reached out to my contractor to have him come walk the property with me, which we've done 2 times since then. So so we looked at the property first and then really started to dig in, putting aside all other numbers of what they were asking for it. We weren't able to come up with a purchase price yet because it really was depending on the scope of rehab. So getting that number first was a really important piece for us to understand how all of the other numbers in this process would fall into place.
So so we know the after repaired value. So we're going to share with the audience here how we actually come up with what's the maximum allowable offer we could make when paying all cash. So what were the repairs estimated by your contractor?
$320,000.
Okay, $320,000. So we know what the after repaired value is. I'm going to use $1,250,000. I know you're conservative, saying between 1.1, 1.25. Let's say it comes in at 1.25, and that's what you actually sell it for. So to come up with the maximum allowable figure that you could offer, how about share that formula with the audience and your new potential private lenders?
Yeah. So on this property, and Jay, I will just say we actually based our numbers on the 1.1 because, as you said, we do try to be as conservative as we can to make sure that we are providing the safety for our private lenders.
Okay. Well, we can stick with that then.
That's where the safety comes in for us. And we're very aware of that and very careful to make sure that we're not over leveraging ourselves. So on this particular property, with an after repair value of 1.1 million, we're willing to go up to an 80% loan to value instead of a 75%, just because the numbers continue to stretch and give a little bit more cushion there as the after repair value goes up. So basing all of our numbers on the low end of that ARV of 1.1 million, 80% of that is our maximum loan to value, which comes to 880,000.
Okay, 880,000 would be the maximum loan amount. So on this property, there's still a 20% equity cushion, which is by far gracious conservative due to the dollars. So your maximum offer that you would make on this property, take 1.1 million, multiply that times 80%, and then subtract your repairs. So let me just run that step by step. 1.1 million times 0.80%. Of course, that's coincidentally both the maximum amount to borrow, and we use the 80% in our formula on our maximum offer. So then we're going to subtract estimated repairs, and you said these were 320,000. So that gives when paying all cash, that gives a maximum amount of the purchase price at $560,000. And I think that's what your purchase price is, right?
That's exactly right. Yep.
Okay. So you got a purchase price of 560. Now let's talk about, so the anticipated profit less carrying cost, 1.1 million. So we'll project the adjusted or project the gross profit. 1.1 million minus a purchase price of $560,000 minus estimated repairs of $320,000, that's going to give a projected profit of $220,000 less carrying cost, interest that you'll pay to your private lender. If you sell it in the multiple listing service, less your realtor fees. And so, even with all that, you should anticipate. Have you run to the bottom dollar what you anticipate the profit to be, even with carrying cost?
I have.
What you got?
So if we sell it at the 1.1, the lower end of our ARV, after all of our additional costs, carrying costs, as you said, our interest to our lenders, our realtor fees, we do plan to list this on the MLS with our realtor. So subtracting all of those out as well, selling at the low end of the ARV, we're anticipating $106,000. And if we sell on the higher end of the ARV, we're anticipating almost $250,000 in terms of business profit on this one property.
Yes. Well, and that's a win-win. Your private lender is going to earn a lot of interest, or your private lenders. You can have multiple private lenders. Of course, for the deal, you don't have to have someone have the entire investment amount. You can have multiple private lenders being secured by the same property and still giving everybody a conservative position. In this case, not borrowing more than 80% of the after repaired value. So I know you're still in the contract, looking to close in a very, very short period of time. I know you're just sort of starting into the deal, but any lessons learned from this deal yet that you would have done anything different, or no lessons learned from this one yet?
Really, maybe two lessons. One really important lesson in terms of negotiating your purchase price. As Jay worked back through the numbers and we knew what our maximum loan to value was on this particular property, which was $880,000, subtracting out the rehab costs that we had already gone through and got a detailed walkthrough and quote from our general contractor, knowing that that was $320,000. That really, those two numbers established our maximum allowable offer, which we knew could be no more than $560,000 to purchase the property. The lesson learned on this is the wholesaler had this particular property listed for $672,000. So we were able to get them to come down $112,000, which is a pretty significant amount, especially for a wholesaler to come down. They had to go back and renegotiate with the seller to accept that lower amount. But ultimately, we stuck to the numbers that provide the safety for our investors and the safety for our business. And the wholesaler ultimately was able to come down and meet us where we needed to be met.
So how do you think the offer was justified at 560 being so much less than 676? Well, there's a big takeaway right there. Regardless of what the asking price is, you let the math make the decision, run the numbers, and if you want the property, you still make the offer, but you have to justify that offer. Would you say the justification primarily came into the scope of the renovations?
Absolutely.
Yeah. Well, and when you're talking with a seller and negotiating, of course, in this case, it was the wholesaler doing the negotiating, but you're not just coming up with offers, out of your hat. I mean, you're actually justifying the offer with the formula that you use to pay for a property.
Yeah.
And you want to keep it. Go ahead.
I was just going to say, we make promises to our lenders. And so we can't go higher than those limits because those are the promises that we make to our lenders. And in some ways that even helps us in negotiating these deals to really let the seller know, whether it's a wholesaler or just a regular homeowner who's selling, to know we've got specific limits to what we can do. And it's a very non-emotional decision that's based very much in the hard numbers to make sure that it's a wise decision for us and for all involved.
There you go. Well, once again, Jonathan, let's give out your contact information to the audience. And so let's give that out, and then we will call this a wrap.
All right. So the website that you can go to is www.jconor, jonathan.goldenrodinvestments.info. And then similarly, my email address is going to be jonathan@goldenrodinvestments.info. And my phone number is 859-388-4660.
Wonderful. Jonathan, thank you for sharing your and Kara's journey, the details on this particular deal. And again, whoever's listening to this show, if you have an interest in getting some higher rates of return safely and securely, be sure to reach out to Jonathan and Kara, and you'll be glad you did. Thanks again, Jonathan. God bless you.
Thank you.
There you have it, my friend. Another amazing episode of Raising Private Money. I'm so glad you decided to join us. And to ensure that I can continue to have amazing guests join us here on the show, be sure to like, share, subscribe, leave a 5-star review. And if you happen to be watching on YouTube, be sure and click that bell so you don't miss out on upcoming episodes. I look forward to seeing you right here on the next Raising Private Money.
Are you feeling inspired by the knowledge you gained in this episode? Then head over to jconner.com/moneyguide. That's jconner.com/moneyguide. And download your free guide that shares 7 reasons why private money will skyrocket your real estate investing business right now. Again, that's jconner.com/moneyguide to get your free guide. We'll see you next time on Raising Private Money with Jay Conner.